Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Tuesday, the 28th of March, 2023, just after 4:20 p.m. Central Time. So an interesting day. This market came roaring back today. It was acting weak at the beginning of the day, saw things come back. And even though the stock market's down, if you looked at the last trades of the day, you were basically higher in the Russell. You had come back in the Dow much better than this price, and you were near unchanged in the S&P. On the energy sector, it appears that there's some issues here. Just was reading a report in Iraq, of all places, that the northern area, the KRG controls, they have lost a case that went before a body they've all agreed to go to so that they're not warring with each other between Turkey, KRG, and the government in Baghdad. Remember, the northern region's got one set of rule, and Baghdad has another. And they're going to lose 450,000 barrels a day. The KRG are going to meet in Baghdad, as I understand it, over the weekend and try to figure out what they can do to work it out. Let me give you all how it works. It's called royalties. If you lost and you don't have the reason to use that pipeline, that's part of a deal that has been deemed that it's not yours, but you need to get your oil out. Let me give you a little help. It's called a royalty. Might get the job done. Don't know. But in looking at things, I don't know if you were watching the bank hearings today, and they're going to be on again in the morning. Man, they are just coming down on the management at SVB. I'm sure they're going to do it for other banks. And we will see just what the Fed does discover. We're not going to know the report that they're doing right now until they say May 1st, and then we will find out what that is. And I am certain it will lead to other strengthening measures in our banking system. But the good news for the moment is there's not another shoe dropping. The SVB deal is done, to at least the phase that was in. There's more to come in terms of selling off assets. And what we got our fingers crossed is that we don't hear another banking problem. If that comes out, traders are forced to turn their attention to one thing, and that is, what is the Fed's moves going to be? Because now the Fed isn't worried, oh, do I have this other shoe happening? They go back to fighting inflation, so we have to go watching the reports. And what kind of reports should you be watching? Yeah, the regular data, but keep your eyes on labor. As long as labor stays strong, what takes place is you can see the weakening in the other areas. We know high interest rates will do that. You're already seeing corporate America firing people left and right. Disney, there was McKinsey today, 1,400 people. There'll be more. Those people, though, have been easily getting gobbled up by other corporations. They're not really staying on the unemployment roll, so that's important. Now, what's important to me is if you want me to keep doing these for you, I need you to give me a thumbs up so that our algorithms show good hits through there. Tell your friends about us. The more hits we go, the more incentive there is for me to continue doing these. It's that simple. There's no charge for these. We're working hard, by the way, and seeing if we can get an area here where if you want to see my subscriber videos, you can do that as well. We're working on it, not done yet. In looking at the gold chart here, as you can see, the market up, yeah, it's down today 0.57, but for the week, at the end of the day, it's made up some of the loss. It's only down 0.57 for the week. When we take a look at the daily bar chart, you can see how the swings are. You had what's called an inside day today, which means you didn't take out yesterday's low or high. The swing line study is still with higher lows, but suddenly what we're developing here, if I'm right, and as we step back on this chart, we can see it. What's the high before this one? And I believe it's a higher high, so watch. I think it was. 2031.70. It certainly was. So now what you end up with are lower highs and higher lows. That means you're narrowing in like that. All right. So the market, is it in a trend? Well, the legacy is an uptrend. You're still over key moving averages, but the fact that you got the lower highs and higher lows means you're really going into a pause, if you will, for a little bit here. When I look at Bollinger Bands, this was the banking crisis. The market then moved to the right-hand side. and has since been losing some of that momentum. And you see that in the slow stochastics, which are overbought. Now, what I like better about slow stochastics than I do RSI or MACD is it's got a character about it. It tells you, is it overbought, oversold, or locking into a bullish or bearish trend? I love that. I don't get that out of the other indicators, and I like that a lot. The June gold versus May silver ratio continues to go in the favor of the silver, and silver is lifting itself up. The difference between gold and silver is this is fully embedded. So until the red line closes under 79, if you've taken my enhanced Bollinger Band course, which, by the way, at the end of this, I'm going to run again for you because you should take it, learn how to work with this. It's saying that on these pullbacks, that's where the pros are doing. They're buying, looking for the closest of, and I don't show you window envelopes on this, but it'll be a window envelope or a Bollinger Band. So you got to pay attention to where those are at. In the copper market, China's saying it's putting money into infrastructure, property, and so on. Haven't seen the impact of it, but that will show up in time. Higher lows, higher highs. So until the market takes out the low of yesterday now, let me just come here and see if I can get this to work for us. That doesn't want to do it. It's going to give me the line there. That's sort of neat in itself. I never saw that happen. But until that's taken out at the 402.35 level, the market remains in the bull camp. Platinum's trying to break out to the downside. Lower highs, lower lows, a settlement under the 18-day average. The bears took control of the market today. In order for this market to back away from that, you'd have to take out 993.90. If you take that out, well, that would negate this downtrend, and barring that, 954.80 looks to me like the first target. If it can succeed in getting under that important number, because it has acted as support very much so recently, then maybe you get to the 943.90. In the palladium market, just like the platinum, the bears have control. And here the key is going to be not to get over 1422. As long as it doesn't, the bears have something there. Now, if we also look, the market prior low was 1386. Today it was 8650. If you take out 1422, you wrestle control from the bears, you'd be over the 18-day average, which is 1415 and a fraction, and that would give the bulls control, and they'd be looking for the upper Bollinger Band. So you're just doing one of these right now, back and forth in that market. In the dollar index, the trend is down. Lower highs, lower lows, admittedly oversold, but the trend is down. So you put it together, you've got to learn how to work with these Bollinger Bands from my perspective, and that's because you hit them so often and you back away from the market, and you have to learn how to work with the enhanced Bollinger Band course and what it happens when you embed the stochastic. Why? Because it tells you, even if the market's way up here, when it's embedded, how do you come in and buy the breaks in the market? Because the average guy thinks the market's overbought, and it's just getting stronger to the upside, in my opinion. Take a look at this, invest in yourself, and learn something. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.